following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Good to be back with you. And a lot of news this morning. I heard specifically the news that was the most shocking was Obama is going to devote literally tens of millions of dollars to help people that he's let in the country that probably shouldn't be here anyway to help find jobs. They're not even citizens. I mean, this really shook me up. A couple other things going on. With the situation in the S&Ps, I had coffee up. Let me just clear coffee here really quick. I saw you guys talking about it in the den this morning. One of the things that, somebody had called in, and I think John from Philadelphia is following up on this. It's a nice setup. You've got a divergence going on down below a navigator, and you've got a kind of a new, we were scaling down on these long-term profiles for a long time, actually back since 2014. And then we've kind of had a profile at the same time we were having our navigator do this divergence move against, okay, so this is the normal drill. We're having higher lows on navigator, and we're having higher, God, what am I trying to say? I'm mixed up this morning. We're having lower lows on our price action and higher lows on our navigator. And then when that is in place there, we're looking at possibly nibbling on these unfair lows around 117.63 in that scenario. So now we've reached the top of a profile in our weekly. We haven't closed above. This is going to be the telltale sign. I mean, we did this before. That's what stops are for, as you know, but this looks extremely attractive from the long side, but we want to see a weekly close above there, just like we had back in the first part of March, and we kind of had the retest right there. This is all looking like a basing action for longs. So, where's the risk here? Looking at the dailies, you got to give yourself a little bit of a safe landing area on this one. This is more of a longer-term play on coffee. Looking at this and having a weekly close above, you're going to be able to look at stops, playing the defense around 133.63 and below. But right now, again, anytime you have any type of supportive action like here on the daily, you've got 130.70 to lean against right now. Again, letting the dailies regulate this trade up and a weekly close above that 135 is going to be super powerful. And I'm stuttering this morning because I rode 25 miles before the show on my bicycle, so the oxygen's not flowing yet. Let's take a look at the S&Ps. Let's get back into that. As we look at the S&Ps, we talked yesterday specifically. There's 2068.75. We talked about, breadth not looking super attractive, being able to possibly sell against that area. We talked, I told you we had sold some the previous day on that particular inflection point. It retested. Obviously, this was a decent down move. I didn't expect it to clean and clear the whole fair auction in one day, but this is pretty bearish actually. Steve and I were talking about yesterday, Steve Banger, about some interesting situations, about some large players basically stepping aside at bare minimum and some of them getting relatively short. When you look at the weekly, you've got that big POC around 2028. That's going to be the kind of the long-term ultimate targets right now. Reached the low of 2035 yesterday. I still think we could go down and get into that area before you start looking at any type of an inflection point to pay attention to. But remember, going back to our breadth and the internal situation, if the weekly starts folding over here and the daily is obviously negative right now, you want to pass on buying that inflection point at 2028. Does that make sense? So, we're looking at this. We're looking at, obviously, we're kind of hovering right below an inflection point. That was the bottom of our profile on our daily. Let's just revisit that. Closed right on it, kind of gravitating down below. I'm looking at 43.25 as something to lean on the short side. Any retraces back up into it. We kind of rattled around here, around that area. I like the way this is kind of consolidating, looking like it wants to head lower. When you go down like this, if you have these moves down and there's still people wanting to be on the bid in the market, you'll see this thing bounce. You want to see this thing get away from inflection points like that if you're looking at the long side. Right now, when you come down to these things and then hover around them and don't want to get away from them, these are usually continuation patterns. And at least you can look at this from a defensive standpoint. Give yourself a little bit of room above 43.25. I know we had a big down move yesterday, but again, this is the type of action you really don't want to see if you're long. And we could have another flush, at least bare minimum, down to 2028. So I think you got about 10, 15 points still left in this before you start having to look at taking off some weight and then kind of regathering yourself. All right. That being said, we're going to look at the NASDAQ. This has been one, zero indications to be long this thing, especially since it was leading the broad market down the tech sector here. So here's the situation on the NASDAQ. Daily closes below 42.88 are going to be super important on this. And then, what do you look for at that point? I think you could easily get down to 41.50 down in that range. So I think you've got a ways to go on the NASDAQ here. And again, looking at this is, continuation-ish type pattern on the NASDAQ. Let's take a look at the DAX really quick. We talked about 10,000 being the big number on this a while back. And again, the DAX right back down into the major inflection point. Had a little bit of a trade and bounce there, but I think we're going to probably drift lower on this one. This is all not boding well for the U.S. markets. We're going to look at Asia really quick. We're going to look at the June contract on the Nikkei. Some kind of decent news on the Nikkei out there, but we're going to look at the yen. We talked about that yen, 105.5 up into 110.40. We haven't reached that 500 pip move peak yet. I think we're at 109 and some change. We're going to cover that in a little bit. Let's look at the treasuries here. Again, I'm still not a big fan of being short treasuries. We had a little bit of a trade and bounce yesterday off the unfair lows, but we're back down south again. We've got some FOMC minutes coming out today later. So again, this is something to probably stay away from. We'll be right back, guys.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. We're going to take a look at Alcoa here. Alcoa has just kind of gravitated back down to 929 weekly unfair lows. Obviously, you had that breakdown. Let me pull this back up in the E-signal really quick. And remember, we were talking about the 10-year before we hit the break. Have some minutes coming out today. I think this is just something to stay away from now. Had a little bit of an opportunity of a trade and bounce yesterday off that 130.02, I believe it was. We're going to look at that again, but you know, God knows what these people are going to say. I mean, I think yelling. I mean, I'm always, the bias is towards the long side. If this lady says anything other than, "Hey, we're going to wait and see," it will be shocking, and the market will take that as the game of musical chairs will continue. So keep that in mind. So here's Alcoa. Let's take a look at the weekly. Unfair lows, we're sitting down here now. Had a chance to try to nibble around 1022. You got a chance again. I think this is not a bad situation on Alcoa. I'm not averse to commodities continuing to rise a little bit here. Here's when you're using the dailies to regulate that kind of weekly trending situation up, when you see these yellow bars or these yellow peelbacks in the scanner, those are without question times to take some weight off at bare minimum, if not take the whole position off, and just kind of wait and see if we get lower inflection points. So again, it blocks out one side of the marketplace for you based on the time frame you're looking. But right now, remember that longer term inflection points takes precedence. And again, in my opinion, I think you've got profiles edging higher, and you've got a pullback to support. I think you've got a decent high probability situation, which is what we're always looking for, and a chance to play defense. I hope that makes sense. All we're looking for is to play the probabilities here, folks. All righty, let's take a look at gold. I'm still a big fan of, the ultra long-term trend on this is long. We're coming back down into some inflection points on the 240. No real dangerous situation on the weekly and daily. There's the daily. Here's the 240 again. Short-term guys, you've got support here. I don't like how it's hovering down here on this inflection point. Remember, you want to see these things get away from these inflection points and stay away from them. This is very similar on a short-term basis on gold to that S&P bounce, situation that we're talking about, coming right back down into it, not wanting to stay away from it. Might have a little bit of a move down here before we start seeing a better place on a long-term basis to buy this thing again. Right now, you've got huge support around 1253. But again, you might have another daily profile attempt to appear if we break down below this 1272 general area, 1271 on the 240s. So again, I think this is maybe a little bit of a wait and see on gold right now. You may get a better lower place to buy this. Depends on what kind of time frame you're looking at, but again, long-term guys, I wouldn't mind adding to a long position on this one. Let's take a look at silver. Looking at the July contract, this is our long-term on silver. So big time support 1644.45, like we talked about. Here's the situation on the daily. You've got intermediate support 1698. So a lot of times, you can try something. Doesn't work out, take the medicine, turn the rinse the same way, try it again. I think the long-term trade on silver is still in force here. And that big-time back up the truck situation is 1644.45 on this one. Crude, man, I'm a little shocked that this thing is hovering around the highs here. We talked about Goldman Sachs coming out with the news. A lot of folks getting bullish on oil finally after we were bullish on it around 30. Go figure. Fundamental news. It's great to trade on fundamental news. No, it's not. The thing you got to really think about too is the price of the instrument is what it is. I mean, the bids and the offers, this is where we're settled. The profiles give you where the fair auction, the balanced area is. We're a little, imbalanced up top here. I think the risk is to get long crude right now. Here's the 240s. Again, nice little regulator up along with the dailies. Again, tight stops can be put if you want to play around with still catching the bid on the short term 47.92, but I think that's a risky trade. I think we're due some kind of pullback, and I think 46.92 down into 46.72 is at least in order here. And that kind of jives with some lower numbers here on the daily. So I think if you're going to get long this thing, I think you need to be patient now. We might be a little bit overextended. Beans, strong. Let's take a look at the November contract. This is one we were talking about yesterday. I'm sorry, I got wheat here. Let me pull up beans. Yeah, every time here we go. We got David White's got a call on this show. He's I watch his show every day. We'd love to have you on, David, if you're listening. So here's the situation on beans. Remember, anything bouncing around in here is still considered a continuation of the trend. Remember, big time stops below 1038 on the long-term bean trade. John and I were talking specifically yesterday about, what's the play on these things. And it's really cool. It would be awesome if this thing just kind of spun around a little bit more. Volatility, may have, it may contract a little bit. I think you've got a chance to do one of those volatility plays on this one. As we spoke about yesterday, there's so many things that can happen with this based on all these upcoming, we've got a huge thing in about 5 weeks on grains, plantings. Remember, farmers usually chase the money, and you may have increased acreage, but again, you got to balance and act with the weather situation down in South America. There's going to be some volatility in this, and we talked yesterday about buying the strangle, maybe taking one leg off if it kind of goes your way hard, and then having the free trade on the other side, or playing around with that let's say market goes up, long calls, maybe selling some calls above, locking in some profits there, playing around with the spread. It's interesting to watch that. If you've never done those types of trades before, Kevin Hinks and the other two partners of his on Thinkorswim at lunch every day, they talk about strategies. Go into your platform, put some demo trades on those, watch how they react, play around with them. It's not a bad way to trade markets when they're somewhat non-directional. We'll be right back, guys.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. Let's hit the dollar really quick. We talked about that weekly close, the 94.12.13. That's Custer's last stance on the shorts, trying to pick a battle, letting the market come to us again, to try to continuation of the trend. But right now, after we had the close up there, we talked about possibly exploring the entire fair auction, the retracement back down into this week, 94.31. And then we're kind of off to the races. We've hit the POC on the weekly, but what do you do with the dollar now? Where's the forecast? At as long as we stay above 94.12, and let me see who's banging me here. Okay. 94.12.13, that's going to be a little bit of a floor on this right now. We may drift higher into 95.65, believe it or not. That's the top of the fair auction on the weekly, but that will be a look, again, a chance. Let the market come to you. I don't see any leverage whatsoever to put on trades with the dollar right now. I think commodities in general are just kind of waiting. If we have any more dollar fall off, obviously that's going to bode well for most commodities. And I think a lot of commodities are really hanging in there very well with the rally from below 91 and some change up into 95, basically. That's a heck of a move. And when you look at how gold, the crudes especially of the world, let's take a look at copper. We're kind of focused on commodities today for some reason. Copper's just not acted well at all. This is... wow. That is ugly. And then the daily close today, whew, that would be ugly. But again, I think if you get the dollar back up into 95, I think you've got a chance to look at nibbling on some of these things again at that stage. But again, I love how gold's acting. I like how silver's acting. These are natural progressions. 2 steps forward, 1 step back, backing and filling, as they say. I think Larry's actually said that at some point, so that makes me feel good about saying it. We've talked about crude oil a little bit. Let's look at the XLE. This is another situation that we want to pay attention to while trading oil. I mean, oil's making higher highs. The XLE is not. That's why I'm, not super excited about getting long crude right now. And here's the XLE kind of meeting some inflection points and backing off a little bit. We're trading pre-market. It looks like 66.30. That may be a real print. So a little bit lower this morning. And I'm not a big fan of piling into oil stocks right now. I think we've had a good run. You got to be happy with what you've been given there. And here's the energy sector. Kind of, to some degree, held up yesterday. But again, I don't think you should be shorting any of these stocks. But again, I don't think you should be going long either right now. You got some Chesapeake Energy. Let's take a look at that. If you're looking to short something, let's see, this is a lot of people, $5 and below. Some clearing firms don't even allow you to short those. Depends on where you got your clearing. I think half the world's got their clearing at Interactive Brokers or Thinkorswim right now. There's more Murphy Oil. If you're looking to hide, this stock's pulled back. I don't like it how it's, this is our weekly here, but you've got something to pay attention to. We talked about this last week, getting down into this 28.58. Not a bad trading bounce opportunity. You got some support all over the place with this, but not open yet this morning. But again, got a great chance to play defense there. Some of the other ones that we always look at, SWN. This little baby is, we have a weekly profile appear below price action on SWN this week. Extremely bullish when that happens. And when you have chances to buy this thing, this is kind of a collection area between 1073 and 1146. Had a nice little move yesterday. It's not printing yet this morning. Well, I take that back. It is printing this morning. I like this little stock. It's been a great trading stock, actually. Only trading it from the long side, too. I had an email about POT. I'm going to review that really quick. And a question in the den from Confetti Wars. Did I say that right? Confetti Wars, yeah. About Colombia. Yeah, I mean, I'm going back to Colombia in a couple of weeks, and we'll try to do the show down there. I'll try to get the same place, and I'll be able to run a network cable up to the balcony, there's a penthouse deck up there. It's just incredible view of the city. But yeah, I mean, the internet connection that I've experienced in Columbia has been incredibly good. So if you guys are thinking about going down there, somebody was asking about it, and trading for a while, I see no reason why you can't do everything you need to do on the connections down there. Okay, so let's see if we're printing this morning. Yeah. So potash is trading 1641 this morning. Somebody said they bought calls yesterday on this, June 17 calls. I think you're barking up the right tree here. I mean, you've got 1759 kind of in the way here, but and let's look at the weekly again and let's review this. I think you've got a decent support area. Here's that 1535. That was a chance to pick a battle. You kind of gotten clean and clear of the dailies again, but you got a big problem with 1659 as a major inflection point. But again, the volatility on the options, I would assume, is extremely low in this. You got to buy volatility in those type of situations. I don't know how far out these calls are, June calls. If you got anything in them and you got a bounce like that, I think you got to take them off because lofty aspirations on this are 1759. Okay. Let's hit some currencies really quick, and then we're going to try to hit some stocks. Here's the yen trade we've been talking about. Again, that big 105 area. Well, let's see if I can get my charts to work. All right, let's close this out. Restarting the currency server here. Sorry, guys. Here we go. All right, so here's the yen trade. Here's the long-term weekly. And again, I know, if you look at the scanner, this is the scanner. You go into the Forex section, and you look at JPY USD, and there it is. So you'll immediately see that we're below profiles on the weekly. We talked about a hole in the marketplace. If you guys are just joining the show back in 105, 106, 105 and a half. We reached that. We talked about targets of 1040, 110.40 up top. We're going to talk about that in a little bit. When we come back, there's that 110.40 as I'm mousing over that weekly unfair low for a great retracement of 500 pips. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. We are showing the Canadian dollar. We talked about the yen. Let me go back to that just to summarize that. Here's that 105.5, that kind of back the truck up area. Joey and I were talking about this, 105, 106. And, where's the targets? There's that 110.40 up top. That's, the retracement situation. I actually think we're going to go much higher than this. This was an anomaly, and I think it just shoved some people out of this trade. Large amounts of money on the wrong side on that one. And I think we could actually go higher than 110.40, but you got to be willing to take some of the weight off at 110.40 on the yen. And here's the daily. If you're kind of using this to play defense, 108.08. We got some really cool bounces off of that to lurch higher. Here's another reason I don't like the oil trade right now. Canadian dollar continues to kind of get devalued here. Chart going up. That's the way that works. And we talked yesterday about, this thing looks like it's compressing up into these inflection points, not wanting to get away from them and stay away from them. And we get a daily close above 129.60. This thing could take another leg up into the 132s of the world. And why is that the case? 132, 133, those are previous points of contention. A little bit of a hole in the marketplace. It could move pretty quickly through there. So watch the oil trade. I wouldn't get too excited about it right now. And that's why we've been talking about staying away from the oil stocks right now also. I think you've got possibility to get those a little bit cheaper if you're going to grab them. The euro and the Aussie, we're going to hit this really quick. So the euro never had a close above this profile, reversed, closed that back down below, and then retraced up and hit it. Obviously dollar getting stronger, euro is going to get weaker. We're down at some support here on the intermediate on the daily, 112.58, 59. What do you do with this? Could have a little bit of a trade and bounce here. Opportunity on the short term. Make sure you put your stops relatively tight on this one. This could continue to fall. We've talked about the dollar possibly moving a little bit higher. So again, this might be. It's not a back the truck up, get long, and let's shoot back to 114.64, 65 on this one. This might be short lived if it bounces here. Aussie dollar. This has kind of been a no trade for a while, and we've talked about this. Again, breaching the 74.81, all bets are off on the long term. Broke my heart, of course. Let's go back to our other server here. And let's take a look at some individual stocks. And you guys, please throw some instruments out there in the den if you want me to take a look at them. We're going to take a look at Apple. We talked about, we always talk about waiting until the market comes back to us. That happened. We got back up into this 93.81 on Apple. I don't see, I think that was a blip on the screen with the Berkshire Hathaway news, and blah, blah, blah. I mean, 76, I think 77% of the world's phones are not Apple. And, overseas, I mean, they've completely priced themselves out. I mean, I'm in Asia a lot. It is, you rarely see them. And I don't think anything going on in China is going to help this case. I think the Chinese kind of have it licked when it comes to copying things and putting out relatively cheap pieces of equipment. And I just don't see them breaking in too hard over there. And I think this thing's seen its better days, put it that way. And it's not like we just came to this conclusion. I mean, when you use these profiles, you go back in time. And when we started breaking down below this 125 here, again, these are telltale signs. I mean, you've had a trend in force since 2013, a really nice trend. When you break the profiles in the long term, remember, okay to be short, not okay to be long. And then, the worm is turned on this particular stock when that happens. And then you're looking for trading opportunities, but the long-term investment grade situation on this, the spine was broken there. And I don't think it's over here. I mean, when we come down and do these types of moves and we don't get ricochet moves back up and people accumulating shares, I mean, this is and look at what's happening right now. We may have a new profile here, but I guarantee it's going to be lower in these. As the progression goes down, you're just going to have maybe possibly even better inflection points to sell, stronger ones. In fact, you've got a daily one right now. Okay. We're going to take a look at Amazon. And I think we've got a caller, Dave from Clearwater. Dave, you there?
Hey, John. Good morning.
Hey, how are you, Dave?
I'm doing all right. I'm watching the program this morning here, working out of the house a little bit, and I noticed you talked about potash.
Yeah.
And never traded potash, but when I was in high school, I created some along the way.
Okay.
A little humor for your morning, John.
I'm laughing internally.
Yes, because I know you don't know what I'm talking about. You might have seen it on a movie, but definitely. But I'm only kidding, man. Hey, quick question for you. I thought I heard you say on an earlier show, and unfortunately, John, I'm not able to watch every day. But didn't I hear you say, I don't know, a week or two back that the TAS Navigator was going to be making it into the scanner? Did I understand that correctly?
Yeah. We're actually we've got an HTML5 version that we're about 85% finished with, which will work in a web environment. And you're going to be able to choose the exchanges or the indices that you want to really get information on. Because right now, we flood you with, a lot of people don't use, it's a great question, because a lot of people, we've got, spent a lot of money actually incorporating all this. I'm showing it on the screen now. All these indices, I mean, you're getting thousands and thousands of instruments slammed into your client machine to populate all this. A lot of people don't, necessarily look at what's in the TIE Set 100 on a daily basis here. So the HTML5 version will be able to kind of choose the amount of information you want via the exchange. It'll also have a much better chart in it than the C# version that you're looking at now, the downloadable version, and that'll have Navigator and quite a few other indicators in it. So it's on the way.
Okay, so that's basically, it's an HTML, which is a hypertext markup language or whatever that stands for.
Well, basically, you're going to be able to access it within a browser environment, and but I personally like an application. It's the web is the web. I mean, if you guys trade Nadex, sometimes that's in a web HTML5 container, and it's quirky at times, and it kind of gets a little sticky, and might mess up your machine. But that whole HTML5 environment is getting better and better on a daily basis. But we are putting a version of this in that type of container. Dave,
okay, awesome.
I'm going to break. If you want to stay on, I'll
yeah, one more
I'll
question,
be back.
please.
Okay, great. I'll be back, guys.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. I think we've still got Dave. Dave, you there?
Hey, John. Yes, sir.
Hey, man. Hey. I got the potash joke. I thought about it for a while, and
I probably shouldn't have said that. Tom's like, ban him.
It's great. It's like good for people like me who are slow-witted and on the verge of not thinking very well, and to give us something to think about, like a puzzle or some kind of thing, and it helped. I got the synapses are going again. Thank you.
Yeah, there you go. Well, if you're creating it, it tends to slow the synapses down a notch or two. But I didn't grow up in farm country, John. I grew up in Miami, and we weren't.
Wow. How? If you don't mind me asking, how old are you?
I'm 47.
Oh wow, so you grew up in Miami back in the 80s.
Oh John. I could tell you some things I witnessed growing up that if you didn't grow up down there and if you weren't down there, you'd think I was making it up.
No, man.
The insanity of the Mariel boat lift and everything that followed after that.
Oh my God!
Craziness.
Man, you were right in the middle of it. Oh my God!
Are you kidding me? I was hanging out on the beach with some friends of mine when I was a kid. I grew up 10 minutes from Miami Beach. It's even that. I could ride my bike down there. And one day we're just hanging out. We're throwing the frisbee on the beach, and man, look up and there's these boats landing. Boom! People running. It was like an invasion. Something. It was crazy, the stuff I saw growing up down there.
God.
But at the time I grew up, yeah.
The time of the
that
cigarette.
whole border security means something to me, man. You know what I'm saying? Yeah.
Got it.
So yeah, I've watched it. Craziness. But anyways, question for you.
Mm-hmm.
The John Logan trading system via TAS profiles.
Okay.
If you don't mind, pull up the great British pound US dollar crossbear on Forex, please.
Okay, yeah. I'm just going to go to the screener
so
here.
I got the weekly pulled up.
Let me go back to the currency section. Okay. Here we go. I'm on the British pound now. We're showing it. And here we go.
Okay, so looking at this within just the lens of TAS profile and forgetting other things I've learned along the way. So let's say I'm just a newbie, and I'm just looking at this. So I look at this, and I see that we have an unfair high of 1.4447.
That's a long-term
this
weekly.
We're breaking through the unfair high.
Mm-hmm.
So it's reasonable to conclude that as we break through profiles, again, these are points of high volume resistance, which act as resistance as well as support, depending on which direction it's going. So it looks like the British pounds come down for several months now. It's now hit bottom. We now have a profile close, if it stays above it for a couple more days, on the weekly. So then we say to ourselves, it's better to be, we want to block out being short. We now want to go long. So then the next question we say to ourselves is where would we want to do an entry point? So then would it not be reasonable to then go down to a smaller time frame? This case, going from the weekly down to the daily, and it seems that since the daily unfair low is 144.97, and we have the unfair weekly high at 144.47. 144.97 obviously is bigger than 144.47. So if we get a test of 144.97, okay, and we got
about 15 seconds. Let me hit this really quick before the show ends, if that's okay. So the key point here is navigator divergence again, lower lows price action, higher lows navigator. We have a breach of profiles here. There's a lot of fundamental news coming out on this particular situation in June with the Brexit, but the collection, this is a long-term sea change type long trade, and the collection area for this 144.47 and 144.90 and some change on the daily. I think you've got an opportunity here on this one up into 146.79 and higher. Thanks, Dave.
Thanks, John.
Okay, bye.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.